Good morning and welcome to GrainTV for April 5th, 2012. To my right is Cody Bills and I'm Brock Shimbano. Tomorrow is Good Friday, so the markets are closed, and Sunday is Easter. But before the Easter Bunny can bring us his Easter basket, Cody will bring us the export report.
Alright, the export report was bullish. We're going to need more than a rabbit to deliver the old crop that was sold last week. 937,000 metric tons. New crop, 185,000 metric tons. Beans came out at 406 in old crop, but look at this new crop. 706,000 metric tons were sold in this new crop. That's very positive. You know, I think that really reflects the USDA's report last week, and I just think that that a lot of that was for China. China bought over about 525,000 metric tons for that new crop. So to me, I like to see those sales early on. And then wheat came in at 408,000 for old and about 103 for new crop. So all in all, these were very bullish weekly export sales numbers, and I expect to weigh positively on prices this morning.
Yeah, and even in the overnight last night, we saw Egypt step in and buy about 115,000 metric tons of United States wheat. That's the fourth tender in a row won by the United States from Egypt, so that's definitely positive on the wheat market as well.
Yeah, absolutely. Let's just take a quick look at where we stand in terms of corn. We're ahead of pace 15 million bushels. We increased 6 million bushels from last week. Of course, last week we had that dismal export sales. This week we're looking pretty good again. Sales for beans were ahead of pace 10 million bushels on the year to meet the USDA expectations. We improved 5 million from last week, and as you can see, the second half of the marketing year, you know, from about this point and over, you know, we're outperforming, and I expect to see that continue, and perhaps we actually eventually raise the export sales expectations that the USDA has. I don't think that that'll happen in this next report, but perhaps down the line they will be raising the USDA.
Yeah, my thoughts are right in line with you, Cody. We continue to see production problems out of South America. We're going to see their exports tail off this year as well. So I do think that we'll see increased demand as we move through this year for our soybeans here domestically.
Well, that sounds fair enough. Now, that is the export sales report. Now, Brock, what are we looking at in terms of ethanol?
Well, in terms of ethanol, we have seen ethanol production continue to decline over the last several weeks and actually a couple months now. We've seen production down 1.8% versus last week. Versus last year, the same week, we were down 3.2%, and our stocks are actually increasing. We're actually 12.4% above where we were last year. So both of these factors are weighing negatively on the ethanol industry right now, and in turn on corn prices as well.
All right, well, that'll do for the first half of the show. We'll be back to watch the market open and to take a look at where we are in terms of the charting landscape.
I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Welcome back to GrainTV. The markets are open in Chicago, so let's turn over to the Fire Tip trading software for the live quotes. Old crop corn is unchanged. New crop is up 2 3/4. Soybeans up 10 cents. Wheat in Chicago up 1 3/4, and Kansas City wheat up 4 1/4. Earlier in the show, we spent a little bit of time looking at some of the fundamentals as it pertains to export sales, but let's turn our attention in the second half of the show to the technical landscape of the May corn contract.
Yeah, right now what we're looking at is a candlestick chart, a daily candlestick chart of the May contract. So each one of these bars represents 1 day worth of price activity. Just take a look at where we were going into this report. We were down around $6, and then following the report, we rocketed higher on tight stocks. Now we are up trading around $6.60. We are near the high side of the range, but I think what's going to happen here is, though we are off to a relatively good start in the trade, I wouldn't be surprised if we don't make any sort of significant gains this Thursday. We are going into a long weekend. I wouldn't be surprised if we almost end up in the negative, even by the close. But you know, look down here. If you zoom in, you can see that we did have a bit of a gap. I wouldn't be surprised if we come back, we fill that gap, and then we move higher. I do think we're going to get up and we're going to try and test the high side of this range, just because we do have such tight old crop stocks. Brock, I know you've been focusing on the July and the December corn spread. What are you seeing over there, and what's your price target there?
Yeah, basically what we've seen over the last couple weeks or so, I think the market is realizing that we have tight old crop stocks. That's going to keep these front months a good support level underneath them and actually push them a little bit higher as we move through the summer. And then the second part of this equation is the fundamentals for the new crops is looking pretty bearish right now. We have the prospects of a large crop being planted. If we have good weather through the growing season, that's going to continue to weigh on the front months. The deferred months, the new crop December contract. So I think we're going to see these two contracts kind of go in two different directions. Right now we're sitting at a $1.04 premium on the July contract, as you can see on this chart. Last year, if you remember, we had a similar scenario shaping up. We actually got up to about $1.20 to the July contract premium. I think this year we could definitely see the $1.20 and probably even go even higher to the $1.30, $1.40 area on the July contract.
Yeah, it seems like we knew that there was going to be tight stocks and we knew there'd be a lot of acres planted. But this last report really surprised on both sides. We had tighter stocks than analysts expected, and of course we were putting more acres into the ground than analysts expected. So I think you're definitely right. The spring is coiled for this spread to really explode here. That will pretty much wrap up what we're talking about this Thursday. If you have any questions about what we said, give us a call at 877-472-4607. Have a great Easter weekend. We'll see you back here on Monday.